If you look at an index of companies that say they are involved in leasing, you'll see literally hundreds of companies listed. But there are different types of leasing company, and the question is, where does your company fit into the big picture? Now, many leasing companies are subsidiaries of banks. It makes sense to be close to where the money is. Banks also have another benefit, which is that they have ready-made access to a large pool of business customers, which leasing companies like to access. There are also the ancillary services of money transmission and interest rate swaps, for example. These days, banks want to offer as many services as possible to their business customers, so they too are very positive about offering leasing. Surprisingly, some of the largest lessors in the UK are not banks at all, but multinational finance companies that have grown through acquisition and specialisation, and these are called independents. Now, where do independents get their customers from if they're not banks? Well, independents have developed an alternative way of sourcing lease transactions. This alternative involves tying up with manufacturers and suppliers of equipment, so that when the manufacturer's salesman is trying to sell equipment to its customer, it can offer a sales financing solution at the same time, and thereby hopefully speed up the sale. This is called vendor leasing, or if the equipment is low cost, it's sometimes referred to as sales aid leasing. These tie-ups with manufacturers are referred to as programs, and you will hear expressions such as vendor programs and sales aid programs in your firm. These programs can last for years, and as the manufacturers grow, the lessors have to grow with them. As manufacturers expand across the globe, so leasing companies have to open up across the globe as well. Some banks are interested in this business because they have an international network of branches, and so they are in a good position to service manufacturer requirements as well. Some manufacturers are so large and so demanding that they find that lessors cannot keep up with their demands, and they decide to open their own leasing companies internally. This has several benefits for a manufacturer because it allows them to be more flexible with their customers, and they're in a better position to handle returned equipment. These leasing companies that are opened up internally to a manufacturer are known as captives, and some of them are very large indeed. So far, we've been looking at lessors that have good access to leasing transactions, either through pools of bank customers or manufacturers' sales pipelines. But what about those customers, those one-off deals that don't fit in to these segments? How do they get access to leasing? Well, these customers are taken care of by local leasing brokers, small companies of up to a dozen people that can take the leasing transaction from the customer and sell it to a lessor for a commission. Over time, some of these brokers grow larger and larger and become independent leasing companies in their own right. In addition to bank-owned leasing companies, independents, captives and lease brokers, there is a myriad of other companies offering services to the leasing industry. These include companies offering leasing administration software, leasing recruitment companies, leasing consultancies, and lawyers that specialize in leasing. Finally, there is usually a national association of leasing. In the UK, this is called the Finance and Leasing Association, based in London. They in turn are members of a European leasing association called Lease Europe in Brussels. Is your company a member of any leasing association?